Hey, everybody, it's Pete Carmasino here at Chaikin Analytics. This is our weekly halftime show here on StockCharts TV. And thanks for tuning in. It's been great. We've been doing this almost a year now, and June's going to be a full year. And we've been having a great time. And hopefully you've learned how to use the Chaikin plugin on the ACP platform. Pretty simple to do, easy to use. And then we've kind of we flip between the ACP platform and the Chaikin platform. Today, I'm going to take a bit of a different approach and kind of look at what's happening in a couple of major indices here. The SPY, well, the SPY ETF, which is representative of the S&P 500, and also looking at the Qs, QQQ, which is a representative of the NASDAQ 100 index, the ETF, and we'll look at the DIA as well. We're going to kind of flip through some charts here, look at the overall market patterns, what's happening, what's playing out. We've got a negative down day here today. It's kind of like teetering back and forth between negative and positive. And it looks like this particular week is probably, going to be a little bit of volatility, but mostly range bound only because we've got expiration coming up and there's a lot going on. So let's take a look at what we're seeing on our indices, on the ETFs, I should say. And we actually have on the Chaikin side, we have some buy and sell alerts that kind of pop up depending upon what's happening, mostly getting sells, as you might imagine. So we'll look at both sides and quickly review just some main charts here today, kind of see what's happening on the system on the ACP side, but also on the Chaikin side as well. So let's take a look at the charts. Okay, starting off today, we're just going to look at the overall market setup here that we've been talking about really since this right shoulder formed somewhere back at the end of February, beginning of March. We started to call it out. We weren't obviously alone in this, but what I looked at was trying to kind of build a mirror image of this move from the neckline all the way up to the head, and then reversing that move down here. And so we got a target of around 3750, and been talking about 38 or 380 or so, or 3800 on the S&P, and it's kind of obviously playing out. But there could be lower levels below this, right? This is sort of an initial target, and we haven't seen many rallies here that we can consider to be bear market rallies. Really, we only saw one. This could be two here, and typically we've seen between 4 and 6 in other bear markets, right? So we can't really base everything off the past. It's all we really have. We don't know exactly what's going to happen. I wish I did. But we do have some things breaking out that are obviously inflationary, like oil and things like that. We've seen CPI increase, but oil's up over close to 2% today at 112 and change. And so when you start to see things play out, we're noticing those trends, right? So from an overall market perspective, just be cognizant of what's happening there. Obviously, most of us are technical oriented because we use the ACP platform and Chaikin. But we do have a fundamental bent as well, looking at our ratings. But let's look at the interest rate levels as well. These are previous targets that we had called out. This is a new target. We're looking at somewhere around that 375, 3.5 to 375. Again, that would be very damaging, I think, to the fixed income market. But we've got to be aware of that. That's sort of playing out. And if I look at a longer term chart here on that particular interest rate, we can see where those levels start to come into play, right? There's your 350 level, and obviously 375 is just not far behind, right? So it's not really out of the realm. When you look at the longer term chart, right, this is going back to the 80s, right? This is 1981 here at the peak, and all we've seen is the 10-year move lower, extremely lower here in the pandemic levels. Again, I'm trying to build a head and shoulders formation, which actually did play out. When you start to see the head and shoulders, the neckline build, and what's happening there, all of that is starting to play out, for at higher levels. So let's look at what I was referring to in the beginning. Here's the S&P ETF. Okay, we see the breakdown. It's obvious. Up here again, this is not something that you have access to on ACP. But you see there's the number 57 up there. That doesn't mean Heinz 57. It means there are 57 signals in our system over the 500 names. So about 10%, a little bit more than 10% of the names have some sort of signal. You can see the relative strength buys on that rally move, but you can also see some relative strength breakdowns. And what I like to do is look at them by sector and sort of determine, is there a problem in a specific sector more so than others? Okay. And so you do tend to see that. And the one sector that's standing out, obviously, is tech, no doubt, communications there, charter. But you see these two, NEE is a utility company, but you see UPS as well. So you do see a few different sectors being represented, the transports, things of that nature, right? So from a positive side, you do see an energy name. So if we look at OXY, we could see that when you start to pull the chart in, we are a very bullish rating on Occidental Petroleum, right? If I go to the chart here while that one pulls up, OXY, right? You can see what's happening. I mean, what an amazing move this has had over a short period of time. But if I look at it really in the aspect of sort of just a line chart, you can see the CPI down here has been ratcheting up over time. And Occidental has really been in a consolidation mode since March, right? It's really not breaking up or breaking down. It's kind of moving up. But really, I would really call this out to say that right now it's really breaking out of that range, right? And you can see where we are extremely bullish on almost all the factors except financials. Now, a little caveat here: the valuation sometimes brings the financial rating down slightly, right, on that particular name. So let me just switch here. I'm getting hung up when I share my screen. Sometimes I move too fast and it puts it into a tizzy. So I had to obviously, just refresh that really quick. Relative strength's been strong. We're breaking out of a trend, and I'm going to go to that financial sector just so you can see, or section of our rating, so you can see what I'm talking about. So you see price to book. Price to sales neutral, but price to book and long-term debt to equity are pretty bearish, right? It's just relative, to overall market conditions, but they've got excellent cash flow, and really the price to sales is not overvalued. So when you look at it from that standpoint, you're not getting a lot of yield out of the name from a dividend perspective, but you do have some potential growth. And when we see oil levels migrate and kind of stay where they are, you're going to see a higher potential energy price for longer, which means better profit potential for names like Occidental. So let's look at some other names that we're kind of signaling here as well from the bullish side of things. Let's look at Humana, right? Humana now is obviously sort of a name that's obviously in the healthcare side, and it's been relatively range bound, really not breaking down, not breaking out either, but not giving you that bang for your buck growth. But sometimes in a market like this, you're not looking for growth. You're looking for, capital preservation sometimes. And so we went to the chart here and pulled up Humana, and just so you can see what you can see on your side. Obviously, the chart's similar; it's going to be identical, but you can see where the rating is kind of a mixed bag. But from a technical standpoint, it is range bound, so it's really not giving us a signal either way. But fundamentally, it's looking very strong. Let's look at some other ones here on the downside, on the negative side. So let's look at UPS. I mean, obviously, I don't know about you, but our UPS truck in our neighborhood is up and down the street 2 or 3 times a day still in this environment. So we're getting a relative strength breakdown. We've been seeing this now for a month or two. Well, you saw an uptrend here. So again, very stagnant, neutral setup here as far as fundamentals. And if I pull it up on our chart here, we're going to see, obviously you can see that cross of the 55 EMA below the 200 SMA. Not a terribly good signal. Get rid of this and replace it with an RSI real quick. There we go. Okay. Obviously, really pinned right down to the bottom lower level of the RSI. But if you start to see really what's happening. It's finding support and bouncing. Now, a lot of names are looking like this, right? Look at the gap that it had to fill a few times here. There's a lot of gaps in this name, and in earnings reports and things of that nature. There's all kind of announcements, but overall, the trend is really not in your favor here, right? And if you look at our relative strength area, it is breaking down. We're getting a relative strength breakdown. I would think anything below this level of 176, 175 is obviously going to spell probably more trouble for any names that are kind of breaking, their 52-week lows. That's pretty evident. These are pretty expensive names. All of these are high-level ones, but let's look at Microsoft, which is widely followed, certainly a widely held name. And we're getting a mixed bag here from all of our signals, right? Neutral to begin with. Relative strength has been breaking down now, really an excellent indicator back here, January 4th, when this started to really roll over. You saw a series of lower highs and then finally a lower low here with a bounce. And that really started that trend that week of January 11th. Negative money flow, obviously seeing that. And here, let's take a look at Microsoft on the chart here. Just so, again, you get an idea. If you buy the plugin, you can kind of see how it kind of measures up. Looking at again, this is a simplistic chart. I can build a really sophisticated one on ACP, but I tried to just keep it simple for the videos. But you can see this area, that 275 was, it seemed to be an important level of support that was broken, and it migrated almost directly to 250. 250 and 2 cents is where it went, which was the previous level of support. If you scroll back a little bit further, could we potentially see 200 on the name? Why not? Right? Why not? The way markets are trending, that's kind of what we're seeing. We haven't seen this breakdown in a very, very long time. That almost crossed here in 2019. And remember what was going on. We were coming out of the fourth quarter of 18 when what was happening? Rates were rising, albeit very slowly, but that's what was happening. And really, I can't even scroll back on a daily. I have to switch to a weekly, which doesn't really give me a fair look. But as far back as we can scroll, I haven't seen this negative trend in a very long time in Microsoft, right? And so when you see what's starting to happen here and you see names giving you breakdown signals, you got to pay attention, especially to the big names, especially the big ones. So let's look real quick if we can. I'll pull in the Dow, DIA, just so you can get a quick, fresh look at some of the names that are signaling here in the Dow. I'm not going to load all of the names in there, just 30 of them. But we only have 5 names that are bullish, right? And what are they? They're basically consumer staples, healthcare, oil, chemicals to a degree. And you're seeing those are defensive names. And if I go here, not a lot of activity, but the same 2 names are coming up, IBM and Amgen. But you're starting to see estimate revisions break down here on Disney, right? And there's your Microsoft. So a very similar look in this particular index as well. So that's all the time we have. We're going to wrap it up here and take a look at just, the last look at the Dow, and the breakdown really started to occur here. Relative strength has been strong, but it really just has been in a downtrend. Again, when you look at it versus the S&P, it's been a strong relative strength, but overall still negative in direction. Okay, folks, that's all the time we have for today. Thanks again for tuning in. We'll be back next week with another video here on Halftime on StockCharts TV. I'm Pete Carmasino. Have a great week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.